let's bring Simon Marin into this discussion from Aliom. Simon, good morning to you as well. This idea, as Chris was saying, that the money markets has only been about 20% priced in that there will be an increase. What is that telling you money markets are thinking about inflation?
Yeah, interestingly, I think a little bit underdone there, and we did actually mention that last week at this very time last week. When I looked just before I left this morning, about 27% chance priced in for a rate hike by the RBA next week, August the 3rd. Interestingly, if we look at Australia in isolation, it seems to be the only thing that could potentially stay the hand would be this figure at 11:30 today, but the prognosis doesn't look good. Fuel prices are on the up a little bit. Interestingly, if we think about the 10% increase we saw to tobacco products, I was reading a report yesterday that showed that alone could factor a 0.2 to 0.3 percentage point rise in the CPI figure alone. So there's a good reason to quit smoking there, as your mortgage might get cheaper. House prices also on the up there as well. So I think a 0.8 figure for CPI this morning, 11:30, would show me, and I think should show those interbank futures quite quickly, that the RBA is pretty much going to lock in 25 points next month.
Chris, will the fags be ripped out of the underlying number, though? If we classify them as food, which for many people they are a substitute for food, is it fair to say that that's part of the volatile series that you yank out? There, Chris, talking about the European equation as well. It's been featuring in previous Reserve Bank minutes. It's something they're mindful of, but you've got to say, starting to take the proverbial back seat to domestic issues, right?
Yeah, and I think they said as much if you sort of read between the lines in their minutes on the 20th. They said, not these words, but they're going to be a little bit more flexible with regard to their decision making with what's going on around the world. And I think they were sort of talking about the fact that European debt crisis is potentially over, and we've got to start looking a little bit more inwardly and focus on what's going on in Australia and more importantly the Asian region as to how our decisions are going to fold out. But still, US and Europe, you can't ignore them. We've had an outstanding US reporting season. That's going to be factoring in the RBA's mind. The European not so stressed bank tests, and also I think just last night the Basel Committee on banking supervision for the relaxing or potentially softening some of their proposals on capital and lending requirements for banks as well. So again, a little bit of a softening or an easing there in their stance there. I think is all going to be adding up to the picture that bourse around the world looking quite good, and as we mentioned earlier, the Aussie dollar holding up above 90 cents as well, so it gives you a bit of a picture on global sentiment also.
Well, Simon, have Basel gone and blown it? I mean, here we've got a chance for Basel III, it sounds all well and good, doesn't it? To kind of make amends for deficiencies last time round. If the bark has got nothing like the bite or vice versa, what's the point of it?
Yeah, that's a really interesting point, and here's the thing: we've got to look at Europe and look at if we're talking about the RBA and their view of what Basel's doing, because who knows what's going on in their minds, but really what matters is what the RBA thinks they're thinking about, because that's going to impact their decision next week and for the domestic economy. It's quite interesting if we look at Europe as a whole. There's some tentative signs of some recovery there. UK retail sales, biggest jump in 3 years. Interestingly, UK retailers are the most optimistic they've been in 6 years, so go figure that one's quite interesting. But there may be a little bit of a recurring nightmare going on here for the RBA. Remember, they jumped off the starting line October last year. They had a little bit of a pause in January. They then resumed early in the year, only almost a week later to be hit with this massive European debt crisis. So again, it's looking like the dust's settled now. Will they continue, or will they pause just to make sure the dust has settled? That's going to be the big question.
Chris, without getting sidetracked, that optimism
suffering at the moment.
And this is an interesting thing as well, because let's feed it back into the US. Simon, overnight, consumer confidence, kind of a forerunner now to consumer spending. You sort of saw the jitters, did you not, with your McDonald's, your Bed Baths and Beyonds, your Gaps. You care to name the roll call, your Amexes, they were all weaker. Is that the market saying it's actually keying up for now weakness in the final numbers?
Yeah, here's the thing. Any impartial look at some of the market data, the economic data that's flowing across, and it's going to tell you that it's mixed, okay? We're seeing good results, we're seeing bad results, we're seeing lots of different things, and the direction of the market is being less driven by that data, but more the investors' interpretation of it, their sentiment, their attitude towards it. US housing sector still weak, sentiment's deteriorating, as we saw last night with those consumer confidence figures, and in the US, as Chris was talking about just a second ago, it's completely opposite to how it is here in Australia. In the US, it's all tied to jobs, it's all tied to employment prospects and the labour market. An outstanding US reporting season, which very interestingly we've seen, for every 2 stocks that's rallied, we've seen 3 stocks come off. Yet overall the bourse has steadily climbed higher. So, what does that tell you? It's quite interesting. There's been a bit of a switching and rebalancing of moving between the sectors from potentially the weaker firms to the stronger firms. But remember, the US earnings, again, is a backward-looking thing. But what does it tell us about the future? It tells us if we've got some strong companies there, then we can hopefully expect some capex, some capital expenditure, some spending, and then hopefully some job creation and some labour market growth there also.
A lot of hope in all of that. Chris, does that hope translate into
much focusing on?
And Simon, this much we know, and we're going to see it reflected if we get that rise here next week in rates, that is, if anything, the ultimate acid test of the health of an economy. If you have to ramp rates, you're telling everybody that you're on song.
Yeah, waving a big flag there, and it's interesting the dynamic going on between the two economies. We're all about rate hikes, and again we're hearing from Ben and the Federal Reserve that we're not going to be doing anything in that space anytime soon. If you compare the stock markets as well, it's quite interestingly the bounce that we've had since May. I think the Australian market's only had about 25% of that bounce that some of those the major bourses have had. So have they overshot, or are we underdone? And that's going to be a very interesting dynamic that plays out over the next few weeks also.
Yeah, and of course very much for viewers looking at some breaking news. It's just crossing now on screen. MacArthur Coal, its June quarter production numbers have fallen 10.8%. We'll try and put that into context for you as we get what the market was saying that would be, but I guess that feeds into the question of, well, if we've never had it so good here, at least relative to everyone else, so much hangs on China. The push now with China's appetite to lock in supply. Will we sell ourselves down the river and be too complacent? How's it going to play out, gentlemen? Simon?
Well, I think it all hangs on a figure 11:30 this morning. Anything at 0.8 or above, I'd be locking in another 25 points from the RBA, and it's onward and upward for the Australian
Here as well.
All right, very interesting. Now we've got our Vale Anglo-American kicking off results in that space this Friday. Gentlemen, many thanks. Have a good trading day.
You too.
All right.
Thanks, Gosh.
Simon Mariner there from Aliom and